I'm going to keep this short, sweet, and right to the point. Just provide you with straight information, straight insight on why you should not trade options. Options can be the devil. If you don't know what you're doing, options can be the death of you, the death of your account, the death of just everything. If you don't know what the fuck you're doing, options can make or break you. There's pros and there's cons. A lot more cons than the pros, but I'll touch on a little bit of everything and why, this mainly on why you should not trade options, especially if you're a beginner to trading, especially if you're new to the market. Options should be the last thing you are looking into. You should not be looking up how to trade options if you don't even know how to trade stocks. Simple as that. If you can't, options are a derivative of stocks. That's what options are. And if you can't trade Nvidia, or if you can't trade simple stocks, then you're not going to be able to trade options. But let me go further into detail on my personal experience and why you should not trade options. But I still do, I'm not going to lie. And I'll go over the pros and cons and this and that, and I'll keep it short and sweet and to the point. So, essentially, options are the most complex thing in the world. If you think trading like stocks is complicated, if you think shorting, how you have to borrow shares and then you have to buy them back to cover, if you think that's complicated, options are a whole different beast. You have the Greeks, you got Gamma, the big one, the biggest one, all right? This is the one that gets me. I didn't know this prior to getting into the options game, but Theta, if you have to know any of the Greeks, right? Theta is the most important one that you need to know. Theta is essentially time decay. So with options, they expire. And the way I trade options that typically expire the same week. So that Theta, that boy Theta is playing a big part in how I trade. So let me give you an example, right, of how Theta essentially works. So say I'm in a position, I buy a call, essentially I buy a put. Or let's say I buy a put, right? So as market goes down, I make money. So in this situation, right, say I get in over here at, 121.17, and this is at 11.25, right? So say, for example, I get in here, I buy a put, lit, it's going in our direction, lit, and then it goes up to 121.88. But then it retraces back to 121.17. This 121.17 right here, wherever it is, like right over here, is going to hit different than this 121.17. Even though it's the same price point, it's literally the same point, the same price. But with Theta, that time decay, since it's taking longer to go in the direction that you say, in this example, it's a put, so we want it to go down. Since it's taking longer to get to that point, but longer to get to whatever your strike price is, right, when you buy the put, since it's taking longer to get there, the contract is going to be worth less, even though it's going to be the same exact price point, that 121.17 in this case. So this 121.17 right here is going to be different than this one, going to be different than this one, than this one, right? It's going to be way less than this one. Say I bought a put at 120. Our strike price was 120. There's less of a chance that, and say the contract expires at the end of the day, there's way less of a chance of 120, of us going below 120 at 3:45 in the afternoon than there is at 11:30 in the morning. So the 11:30 in the morning version of the 121.17, that same price point, is going to be worth more. It's going to have a higher value than the one at 3:30, 3:45, because there is less of a chance of us being under that 120 price point. You understand what I'm saying? Even though it's the same 121.17, the same price, just because it's later in the day and we're getting closer to expiration, Theta is like, all right, bet. You have less of a chance of being below what you said it was going to be below. In this case, 120. In this example, 120. There is a less of a likelihood that it's going to happen. So the price of the contract is going to be worth less. Therefore, say your contract over here was worth $50, a random amount. It's going to be worth like $7 once it's over here, right? And then once it's over here, it'll be worth, or whatever over here, it'll be worth like 30. You know what I'm saying? So as you get closer to expiration, depending on where your strike price is, in our case, we're saying puts below 120. Since we're not even below that 120, we're out the money essentially. In the money means the strike price or your contract that you're in is essentially making your money. So we're out the money because our put call or our put option is not below that 120 price point. I hope that makes sense. And also, like, that's just theta, bro. Like, I'm just explaining theta. I'm not gonna go all in the details, but that really got me because I'd be like, even if price goes in your direction, you think price is going to go down. If you think price is going to go down, it does not matter. Because there's that time, it's pretty much you have a time limit. The way I day trade options, at least, you pretty much have a time limit on when that specific contract that you purchase will be below or above that strike, depending on if you buy a call or if you buy a put. So it's like you have a timer just on you. So that's another thing on top of the difficulty of just trading in general. So when I trade options, right, I use my same analysis that I typically do. I usually support, resistance. That's typically how I trade. In this case, if we're looking right here, for example, if we're looking right here, this is our little resistance. This is our little support. Boom, boom. I use my same market analysis, but instead of buying or shorting, because I don't have the capital, because I'm trying to turn this account from 300 to 1,000, currently at 520, I go to my options page, and then you have your, and then you slide it over. But then you have your, I mean, obviously nothing's here right now, but then you have your puts on this side, and then you have your calls on this side. And these contracts are worth more, right? These are worth more because these are in the money, and these puts are in the money, right? So say your strike is 121. This is in the money because the price currently is at 121.67. But say your put option, right, is 122. You need this price, you need the stock price to be under that 122, which it is. It's just 121.67. So you can honestly, I like the way Webull has it set up where it's color coded. So these diagonal are in the money, these diagonal are not. Just me explaining that on theta, it's complicated. Just looking at this looks complicated. It's really not, but just looking at it looks complicated, right? And it's number two. That's number one. That's just the first reason. Number two, it's so much more volatile than just trading stocks. It is way more volatile because price is jumping all over the place. Because back to theta, depending on where you are and how close you are to expiration, price is going to fluctuate a lot depending on where that specific price is and where your strike is and how close you are to expiration. Because you essentially have a time limit. It's like you have a timer on you. You need the trade to happen quick, right? You need the trade to happen real quick. So that's the biggest thing. It's just volatile, or theta. It's volatile as fuck. And I mean, that's really what I'm going to go over. But then the one pro. This is the only reason why I say you should trade options. The only reason, if you are looking to get into it, and it's leverage. Options allow you the leverage to use more money, or use less money, I should say, and purchase and make more with your returns. So essentially, one option contract is 100 shares. But you can make a lot more money with $300. So say, for example, like I'm like my example, I'm using $300 to turn the 300 into 1,000. So I've solely just been trading options. And I'll have a $20 day, I'll have a $30 day, whatever. The only way I could do that with $300 is with options, because you have less capital, but you have more leverage. But the thing with that, so the reason I'm making like $20, $30 is I could let it ride. I could let my position ride a little bit more, even when it's going my direction. But I always tend to cut losses quicker than I normally would if I was trading stock, because we go back to that time decay, right? Say, bro, it can be going in your favor like this, but just like that, it can be going in your favor. Say you're buying a put, right? Your put is 121. So as long as you're under 121, you're good. So we're good money, good money, good money. And then it could just reverse. And then just like that, it could be like right here. Or I said 121. But it's complicated. At the end of the day, it's complicated. That's the moral of the story. It's very fucking complicated, because there's so many things to it. But you do have the ability to make more with less. But then again, all right, you can lose a lot of money very quickly if things are not going in your favor. So if I'm back on that put option, right? Say I buy a put, 121 strike. We're good. We're in the money at this point, right? Because we're under 121 if we're on a put. But if it's all the way up here, bro, we're out the money. We could be losing so much money. The most you'll ever lose, obviously, is how much you paid for the contract when you're purchasing it. But you still could lose a lot of money, bro. You could still lose a lot of money, but you can make a lot of money. It's two sides of the coin. That's all I really wanted to go over in this video, right? There's a lot more that goes on within options. I just gave my 2 cents on how options have influenced me. I'm going to continue to trade options, but there's so much to it that it's very easy to not be consistent. It is very easy to not trade how you would when you're trading just stock and just buying and selling and shorting. It is very different. Even though the trade can be going exactly according to plan, how you thought it would, how you planned it would, but it can be taking a little bit longer. It can be consolidating for a little bit, you know what I'm saying? It can have a little bit of consolidation like it is right here. And just like that, you thought a trade was going to go your way. I planned plenty of trades while trading options by just purchasing calls or puts. That's it. I'm not selling. I'm not doing straddles, strangles, none of that. I'm just literally buying and selling, or buying calls, buying puts, and then I'll sell those calls, sell those puts when I want to close my position. That's all I'm doing. That's literally it. There's so many levels to this. But it's just something it's a constant learning process for even myself, right? I'm constantly learning how to trade options. But the only reason I'm doing it is because I'm trying to grow my account from 300 to 1,000. Once I get to the new challenge where I go from 3,000 to 10,000, I'll go back to just trading how I normally trade, which is just buying, selling, and then shorting, and then buying back to cover. Because it's simple. If a trade is going your way, all you have to worry about is where the price is currently at. You don't have that timeline. You don't have that time limit on your back over your shoulder. Like, oh, we need this to happen within. You know what I'm saying? So, if you're new to the game, moral of the story, right? If you're new to the game, new to trading, do not trade options. Simple. That's it. It's complicated. Even like the masters are weary of trading options because there's so much fucking to it. Just trade stock, trade some ETFs, call it a day. That's really it. But stay tuned. I'm flipping the account from 300 to 1,000. And if you end up trading options, obviously use money you're willing to not see again, because the learning curve is insane. But stay tuned. If I provided any value, More to come. I do appreciate the love you guys been showing. So we'll continue to grow, continue to grow, continue to grow. The video's a little bit longer than I thought it would be, but just stay tuned. More to come. Peace.